The stock market's had a big run, so are there investments out there that are undervalued? In this video, we'll highlight 7 stocks that Wall Street thinks could be underappreciated, and we'll explain why. But first, how do you determine if a stock is undervalued? We'll tell you right now in this week's Ticker Tape.
When the market winds blow high or low, tune into our show. It's Ticker Tape, you know.
All right, John, in this video, we're focusing on sales, profit, and price.
Exactly, Caroline. Yeah, we wanted to look for companies with valuations based on their stock price that are lower than the average company in the S&P 500, but are projected to see sales and profit growth this year that is higher than the average company in the S&P 500.
And that's not the only way to determine if a stock is undervalued.
Very true. There's all sorts of ways to make that determination, but this felt like a helpful starting point.
And Wall Street generally likes these 7 stocks?
Glad you asked. Yes, on average, all of these stocks are recommended by at least 60% of the analysts who cover them.
All right, should we get to the list?
Let's do it. First, though, a friendly reminder, these are analyst opinions, not my own, and this is not financial advice.
Stock number 1, Bank of America.
Well, I said undervalued. I didn't say under a rock. Most people know Bank of America. What you might not know is this stock gets top marks from a lot of analysts on Wall Street. And at the end of the day, it met our criteria on valuation and the expected profit and sales growth this year.
Stock number 2, Dell.
Well, look, Dell's come a long way since Michael Dell founded a PC business in his dorm room. But one thing hasn't changed. The founder's still in control, and Michael Dell has positioned this company for a bright AI future, and Wall Street loves the stock, thinks it could continue to climb. And what's interesting is when you look at the valuation, it's cheaper than the average S&P company based on sales and profit, and yet it's expected to outpace the average S&P company on those metrics this year.
Stock number 3, Goldman Sachs.
Well, if you were looking to build a position in this Wall Street Titan, it would have been helpful to do it a couple of years ago. In other words, it's not a dirt cheap stock. However, we're not looking to the past. We're looking to the future. And when you look to the future, this company, based on analysts' expectations, is expected to see bigger top and bottom line performance this year than the average S&P 500 company. And in terms of the valuation, it's cheaper based on earnings and sales than the average business in its own peer group.
Stock number 4, Quest Diagnostics.
Well, this company, with businesses like lab testing, like Goldman Sachs, not dirt cheap. But Wall Street still likes it based on the valuation, cheaper than the average S&P 500 company, with respectable growth expected this year.
Stock number 5, Skechers.
Hey, nothing sketchy here. This footwear maker has been building for the future, investing both in its overseas operations and online, and Wall Street is buying into that vision. They have big expectations for growth this year, and when they look at the valuation, they're looking at this company as being cheaper than the average stock in the S&P 500.
Stock number 6, TD SYNNEX.
Wall Street really likes this one, a company that is a distributor of IT systems and software. I will caution that the sales growth is not expected to be blockbuster this year, but the company pretty much met our metrics across the board.
And stock number 7, United Airlines.
Well, United has already had a big run, but Wall Street is still in the United camp, in part because the demand picture, in their opinion, looks pretty bright. And we look at the valuation based on price to earnings or price to sales ratios, cheaper than the average for the market, and Wall Street has some big expectations for sales and most definitely profit growth this year. All right, that's our list of 7 stocks Wall Street thinks could be undervalued. What's your take? Let me know in the comments. Let us know what other stocks you'd be interested in hearing about. Thanks for watching. Thanks to Caroline. Thanks to Market Lab newsletter for our graphics. Be sure to check that out. It's a great read. Speaking of newsletters, if you want to see my Substack or any of my social media, you can find me at John Erlichman. And don't forget to subscribe so you don't miss our next investing video. See you next time.